Statistically speaking, there may be an upside for TSLA, but we need to verify that first. Let's go ahead and start now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a Tesla raw price action and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so Tesla, bringing it to you in behalf of my buddy Paul. So this is by request, and this one's for you, buddy. All right, so let's take a look at the price action here. Okay, so if we're talking about some very, very short-term supply and demand areas, we are at, we've actually faced a resistance from this top supply zone here. So there is the potential to where we could actually continue on to the downside. Now, it is a daily chart, and this candle would essentially be the confirmation before a continuation onto the upside based on this hammer print on the lower end of this range here. So usually when we get a hammer print at the bottom of a trend, that usually signals a potential continuation to the upside or a reversal of trend. So statistically speaking, like I mentioned in the beginning of the video, the upside can be figured like this. Okay, so I have back tested momentum of Tesla throughout the entire trading history of it, actually, and this back test is actually something that I perform and I do by hand. So in that back test, the criteria, or I'm sorry, the data that came back is quite interesting. Now, let's see, so we have a total of 5 iterations, 4 of which have been guessed to the upside correctly. That gives us an averaged upside accuracy of 80% with an averaged upside thrust of 18.465% over the span of about 27 days. This is proof of work. Okay, so the stats are actually going to change just a little bit because the total iterations now are 6, and we have 5 that have been correct based on my last statistical analysis that I actually performed just about a week or two ago. Based on the firing of the signal when we reached this this area here. These are my trend lines here that I was expecting a bounce from this area here for a continuation to the upside. In that back test, we actually did notice that we had an 18.465% upside thrust. Okay, so let's go ahead and just review exactly what happened. So in that test, the firing of the signal happening right down here, we measure up to the upside and we have an 18.48% upside thrust in which we met almost to the penny. Okay, so the statistical data is proving to be superior in the Tesla asset. Okay, so in this case, the reason why I'm mentioning the statistical data is not because of what happened before, but it's because we are in the process of resetting those conditions in order for us to meet another 18 spot for potentially 19% now move to the upside. Okay, so that doesn't mean that we're actually going to reach all the way down to this demand zone, but there is the potential of it. Okay, but we do have a relevant support of a recently closed gap that was actually made by the wick high of this candle here and the wick low of this candle here. So we do, if you're a regular viewer, you know that I keep my short-term gaps in play for future play. Okay, so in this case, you see that we are still using it as a form of support and or resistance, just like we were using here. So yes, the relevance of it is still present, and we can face a rejection. We're facing a rejection right now, and there is the potential to where the next daily candle starts and it actually retraces down to potentially the high of this wick and the closure of this candle right here. So let's go ahead and take an inverse fib from our current position to the wick high. Okay, so in this case, it would probably be right about here. Okay, so we can actually see that the 2.618 at 173.29 has direct confluence with what we're talking about, a potential bounce from this area here, okay, or this area. So the 2.72 between 174 and the 2.618 of 173.29 would be essentially a pretty good area to consider as a form of support before a bounce to the upside, thus completing the downside move for the stochastic momentum So this could happen, although I can't confirm exactly if the downside is actually going to touch our trend lines down here based on a retracement that's very limited. Okay, so if we do, because there is the possibility to where we can actually retrace a little bit lower, testing this previously closed gap and then bouncing to the upside. There are several possibilities and variables that we need to account for. Okay, so now let's go ahead and move on to the next chart, which could potentially be the last part of the chart. So this is the divergence chart. Divergence is usually, or is, pardon me, is the opposition of price action versus momentum. In this case, momentum represented by this indicator, relative strength index, RSI. Okay, just for your information, the pink line represents a 14-day moving average, which is standard and stock to any RSI setup. The purple line is the RSI signal itself. Okay, so here, these are the drives of regular bullish divergence that we caught right before making that 18 spot 50% to the upside. Okay, so we did catch that, it did make it. So we haven't yet printed another pivot before us, I'm sorry, the RSI has not printed another pivot just yet. And the reason why I'm saying this is because potentially upon the closure of the next 12-hour candle, which you can see is already starting a downside move, this could actually be that pivot that we're looking for if it does do something along these lines here. Let's go ahead and just make an implied projection. So if it does something like this, then we would then have another pivot here for us to consider for hidden hidden drives of bullish divergence. In this case, it would be something along the lines of this right here, where the oscillator is making a series of higher lows and price action is making a series of lower lows. So particularly from this area here down to this area and measuring it like this to the upside. So that's how the divergence would play out if we do print that new pivot. Okay, so let's go ahead and pull up this chart here. So this diagram is actually something I've made for you so that you can tag along. So these are the 4 zones we're looking at, and that I would like for you to focus in on, and these are the 4 zones located on the RSI. Okay, so now let's open up a multi-pane and see if we can gain a bias for direction, at least, let's see, in the immediate short term to the medium term time frame. Okay, so we are looking at a suggestion of a slight continuation to the downside here from the immediate short term 30-minute time frame. The moving average is suggesting still a continuation to the downside. However, when we're landing in these shallow areas of whatever zone we're in, we're usually gravitated into the following zone. Okay, so there is a potential danger for the immediate short term. So this is very, very, very short term. Okay, 15-minute also suggesting a continuation to the downside. So it's just a micro time frame. So this is likely to play out pretty fast. Okay, now this bi-hourly RSI is more in accordance with how the sentiment is in the market space overall due to the Fed meeting that we have coming up on Tuesday and Wednesday. So this is suggesting some sideways trading. We can't actually give this too much credit. Please do remember that as long as we're in these shallow areas of the RSI, we are usually suggested a continuation to the downside. Okay, but in this case, we do have the moving average below us, which could essentially work as a support before us continuing onto the upside, which could be in accordance to what we're talking about of a short-term pullback before finding a support, and which could be located between the 2.72 and the 2.618 of 173.29 to 174.52 before finding a bounce and moving on to the upside. That is not a certainty. That is just a relevant area for us to look at as a potential bounce zone. Okay, so now the 6-hour RSI is suggesting a slight downside here. It's not it's not too significant. It is, however, the position of the RSI signal is very close to the shallow areas of the bear weakness percentile, which only indicate a potential gravitational pull right into the bull weakness percentile. And we are getting a hint from the RSI's 14-day moving average. The pivot is starting to slow down and is starting to expand as price action is actually starting to contract here. So there is the potential to, again, we can find a potential support and bounce to the upside. So this is also in accordance with the price action of finding an immediate short-term pullback. Okay, so now the daily RSI is suggesting a continuation to the upside. It has since made a bullish cross above the moving average, and now it has entered the bear weakness percentile, rejecting the bear strength percentile. Okay, but remember, as long as we're in this case, it's the deep area of the bear weakness percentile, we still would be essentially in danger of coming right back into the bear strength percentile. Just know that the good thing is that the moving average is now below us, so that actually can be utilized as a form of support before continuing on to the upside. So the upside suggestion on the daily should be the same on the bi-daily. Yep, the bi-daily is suggesting an upside. 3-day, let's see. 3-day is indecisive. However, it's in the very, very shallow areas of the bear weakness percentile, which usually means a reversal or a gravitational pullback right into the prior zone. So these time frames are very much suggesting possibly one more day of a retracement, a short-term retracement before a continuation onto the upside. So I expect tomorrow to be mostly sideways, slightly red, hopefully, a little bit of a deeper red so that we can find that support and solidify this condition for an 18% move to the upside, in which could actually be played out like this. This would give us, let's just do it from the two spot 618 173.29. Let's see, the 18% move could potentially lead us to, let's see, the 18% move could lead us right up to about $205.26. But there is the potential to where we don't settle this tomorrow. It could take a few days since we are in the daily chart here. So every single candle you're seeing here is a one-day read. Okay, so that bounce, it could lead to a nice upside move here, and we can actually take an implied target by taking, let's see, actually to the we'll take it from the prior day low and the swing high. So okay, so from the swing high of the on Friday to the swing low of Thursday, we're looking at we're actually in confluence with the 2 spot 618 golden mean. Usually the 618 ratios are usually where the sentiment likes to take price action to. So it's suggesting 204.26, and the price objective of 18% is 205.15. So yeah, I could see some upside moves followed by an immediate short-term downside. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave the links in the description below. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay? I need you to do your own DD and we'll be okay. All right, you guys, but with that said, I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.